Welcome back to the channel. I'm Algabot, and today we're breaking down a MT5 Expert Advisor called Flag Pole Projection. This is a pure price action strategy, which means it uses no indicators at all, none whatsoever. There's no moving average, no relative strength index, no average true range, nothing layered on top of the chart. Instead, it reads raw candle geometry to spot one of the most famous patterns in technical analysis, the bull and bear flag, and then it trades that pattern to its classic measured move target. By the end of this video, you'll understand exactly how it finds the setup, where it enters, how it sizes its target, and how it manages risk. We'll walk through the logic in plain English, read the real code together, and then watch the rules play out on a chart. Let's start with the big picture. Flag pole projection is a trend-following continuation strategy. The whole idea rests on a simple piece of market psychology. When price makes a strong, clean push in one direction and then pauses to catch its breath in a tight little range, that pause is often unfinished business. The market tends to resolve that pause by continuing in the same direction it was already traveling. Traders have given that two-part shape a name. The strong push is the pole, and the tight pause is the flag. What makes this expert advisor interesting is that it doesn't rely on a single indicator value to make its decision. It looks directly at the candles themselves. It measures how far price traveled during the impulse. It compares that to how quiet the market was beforehand. It checks whether the consolidation that follows is genuinely tight and shallow, and only then does it consider a trade. Every decision is geometry, not a smooth line. In terms of markets, this strategy is designed for instruments that actually trend, things like gold against the dollar or the British pound against the dollar, typically on the 15-minute or 1-hour time frame. That said, it will run on any liquid symbol and whatever single primary time frame you select when you test it. Who is this suited for? Educationally speaking, it's a great study piece for traders who want to understand structure-based, rules-driven breakout trading. It's a swing or intraday continuation approach where the trade either works fairly quickly or hits a clearly defined stop. Because the entry, the stop, and the target are all derived from the same flag and pole structure, every trade has a defined risk and a defined reward before it's ever placed, which makes it a clean strategy to study and to reason about. Remember, everything here is for educational purposes only. Nothing in this video is financial advice, and we're studying how the logic behaves, not making any promise about outcomes. With that framing in place, let's open up the engine and see exactly how it works. Let's walk through the exact logic step by step. The expert advisor reevaluates once per newly closed bar, so it isn't reacting to every flicker of price. First, it builds a baseline. It looks back over a quiet stretch of candles, 20 by default, and calculates the average bar range across them. This baseline is the reference for what normal movement looks like before anything interesting happens. Second, it checks for a valid pole. The pole is the most recent batch of impulsive candles, 5 by default. The strategy measures the net travel from the open of the first pole candle to the close of the last. For this to count as a real thrust, two things must be true. The net travel must be at least the PoleFactor multiplied by that baseline average range, which by default means at least double a quiet bar. And that net travel must also dominate the pole's own high-to-low range, by default covering at least 55% of it. That second test is clever, because it filters out choppy back-and-forth movement that covers ground but goes nowhere. Third, it checks the flag. The flag is the small group of candles right after the pole, for by default. The strategy measures the flag's full high-to-low range and requires it to be tight, no more than half the pole's height by default. It also checks the giveback, meaning how far price has slipped from the pole's extreme. That pullback must stay shallow, within the same fraction of the pole height. So the flag has to be a quiet, controlled pause hugging the top of an up move or the bottom of a down move, not a deep reversal. Fourth, it waits for the breakout. For a bull flag, the strategy detects when the live ask price pushes above the flag, high plus a small buffer. For a bear flag, it's the mirror, the live bid breaking below the flag low minus the buffer. Fifth, and this is important, the break must be fresh. If price has already run a full flag range beyond the breakout point, the EA stands aside rather than chasing. When it does enter, the stop loss sits just beyond the opposite side of the flag, where the continuation idea would be proven wrong. The take profit is the measured move, the pole's height projected from the entry. There's also a spread filter, so it skips trades when spreads are too wide. Let's read the actual MetaQuotes language code on screen, the same code the Expert Advisor runs. At the top are the input parameters. Pole bar sets how many candles make up the impulse, 5 by default. PoleFactor controls how strong that impulse must be relative to the quiet baseline, set to 2, meaning the net move must be at least twice an average bar. PoleDominance, at 0.55, demands that the net travel dominate the pole's own range, screening out chop. Flag bars sets the size of the consolidation for candles. FlagMaxFrac, at 0.5, keeps both the flag's range and its give-back tight relative to the pole. TargetFrac, at 1.0, makes the profit target equal to the full pole height. And BufferFrac adds a small 10% cushion to the breakout and stop levels. Tuning any of these tightens or loosens what the strategy will accept. Now the signal logic for a long trade. The code computes a trigger, which is the flag high plus the buffer. It reads the live ask price directly from the symbol. The single condition that fires the buy is this line. The ask must be greater than the trigger, and at the same time the ask must be less than or equal to the flag high plus 1 flag range plus the buffer. That first part is the breakout. The second part is the freshness check, refusing to chase a move that is already extended too far. When both are true, the stop loss is set just below the flag low. The take profit is the entry plus the target fraction of the pole height, and the trade by command is sent. The short side is the exact mirror of this. Let's walk through this illustration, which shows both a long trade and a short trade in sequence. Remember, this strategy has no oscillator panel because it's pure price action, so everything we need is right here on the candles. We begin on the left with a quiet baseline, those small early candles. Then watch the next 2 candles surge upward in a strong, clean push. That's the pole, and its height becomes our measuring stick. Right after the pole, price pauses in a tight little drift, holding just below the pole's top. That's the bull flag, marked by the gold trigger line at the flag high. When the next candle pushes above that gold line, the buy entry fires, and notice it's a fresh break, not an extended one. From the entry, the strategy projects the pole's height upward to set the green target line. Price rallies into that level, and the take profit is reached. That completes the long. Now the market rolls over. Watch 2 strong candles drop sharply, forming a down pole, the mirror image of before. Price then pauses in a tight, shallow flag hugging the lows, marked by the lower gold trigger line at the flag low. When a candle breaks below that line, the sell entry triggers. Again, the strategy projects the pole height, this time downward, to set the lower green target. Price slides into that level, and the second take profit is reached. Notice the symmetry. Strong push, tight pause, fresh break, measured move target, with the protective stop always resting on the far side of the flag. This is for educational purposes only, to show how the rules translate into chart action. So that's flag pole projection. We covered how it builds a quiet baseline, how it confirms a powerful pole and a tight, shallow flag, how it enters only on a live and fresh breakout, and how it sets its stop beyond the flag while projecting the pole height to a measured move target. It's a clean, rules-based look at one of the most classic continuation patterns in trading, built entirely from raw candle geometry with no indicators at all. As always, this video is educational content only and not financial advice. If you found it helpful, please hit the like button, subscribe for more MetaTrader 5 strategy breakdowns, and drop a comment telling me which strategy you'd like me to analyze next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.